High-yield markets, like crypto and global tech equities, never stop moving. They generate an endless, relentless stream of financial data every second of the week. That continuous flow works well for institutional algorithms, but it directly conflicts with the fixed, finite schedule of anyone working a standard job or raising a family. Successfully identifying legitimate market setups requires analyzing volume, price action, and news flow for 8 or more hours a day. For a professional with a career, that is a mathematical impossibility. This chart shows the deficit. Up top is the required 8 hours of daily analysis. Below is a professional's total free time. Subtract a standard shift, a commute, and family obligations, and that bandwidth shrinks to almost nothing. There's zero time left for complex research. Attempting to manually trade a 24/7 market while working full-time guarantees one of two outcomes: a failed investment portfolio or the complete sacrifice of your personal life. When time-poor individuals attempt a DIY strategy, they are usually forced to cram all their financial decision-making into a tiny 1 to 2 hour window in the evening. This creates a massive geographic trading vulnerability. Retail traders in the West are usually asleep precisely when the most crucial liquidity handoffs happen between the Asian and US market sessions. Because of that blind spot, you end up waking up to old news. You enter trades too late, effectively buying the top of a move that happened hours ago. Then comes the emotional toll: checking prices at midnight, battling sleep deprivation, and carrying the anxiety of open positions through the night. The financial loss from missed trades is secondary to the primary cost: deep emotional exhaustion and a disrupted lifestyle. Cryptomanden is built specifically to solve this bottleneck. It severs the link between mandatory screen time and active market participation. The system operates as a smart market interpreter. It focuses on translating global chaos into clear, actionable steps, completely avoiding the hype of typical prediction bots. To do this, it ingests a massive scope of data. The AI simultaneously scans equities, crypto, and volume momentum around the clock. This map highlights the geographic advantage. The system tracks capital continuously, following liquidity as it hands off from Asia, through the Middle East, and into the US session. It contextualizes that volume by reading headlines and post-earnings reactions alongside price charts in real time. The AI's primary function is to measure true market momentum and aggressively filter out the noise of false breakouts. It serves as a tireless proxy. It handles the heavy analytical lifting in the background, leaving you free to focus entirely on your career and personal life. The value of gathering all that global data depends entirely on how it reaches the user. Before you ever see an alert, the system discards weak setups. It scores confidence levels and eliminates anything that doesn't meet strict probability metrics. This diagram illustrates the final output. The filtering creates a concise notification sent via Telegram. It delivers exactly what you need: an explicit entry point, predefined risk boundaries, and a target profit level. You can review this fully vetted setup instantly from anywhere. You retain absolute control over the final execution. The AI handles the advice. You make the decision. This pipeline takes thousands of hours of complex global finance and compresses it into a 10-second smartphone decision. There is one final barrier for busy investors: actually managing the trade safely after the position is open. The system uses a feature called AutoProtect. This acts as a strict mathematical risk limit built directly into every single signal. By locking in predefined exit strategies, you remove the human tendency to panic during sudden volatility or hold on too long out of greed during a rally. Relying on disciplined, automated risk management is the only reliable way to survive the violent momentum common in digital markets. By outsourcing the complex entry analysis and strictly adhering to the exit parameters, you eliminate the emotional errors that routinely destroy retail portfolios. So, what does this level of automated leverage actually cost? This table breaks down the financial input: a direct subscription ranging from $60 to $100. We weigh that cost against the dozens of hours lost to chart reading every month. There is a required behavioral trade-off. You have to give up the thrill of the hunt and agree to act mechanically when the alert arrives on your phone. Furthermore, your total investment bankroll needs to be appropriately sized so the subscription fee doesn't eat into your yields. The subscription is a deliberate capital exchange. You pay a set fee to buy back hundreds of hours of your life. If you're a purist day trader, a thrill seeker chasing a high, or have a very small bankroll, you should avoid this service. The ideal user is a professional or parent who treats investing as a serious secondary yield, but values their time above all else. The ultimate advantage here is gaining objective, risk-managed exposure to the world's most lucrative markets without ever staring at a chart. Cryptomanden is an efficiency engine. It captures the upside of a 24/7 market while keeping you anchored in reality.